Thanks so much for tuning into BQ Conversations. I'm your host, Neeraj Shah, and our guest today is Sanjay Jalona. I didn't think so soon that I'll be introducing him not as the head honcho of LTI, but as the operating partner of ChrysCapital. But it's lovely to have him at an opportune time because we're at the start of 2023, and tech is in the center of all things conversation. Sanjay, great having you. Thanks for joining in.
Thanks for having me, Neeraj. It's always a pleasure to be with you.
Likewise. So Sanjay, just for the uninitiated, can you just tell us a bit about ChrysCapital and what your role as an operating partner is out there?
So ChrysCapital is one of the oldest and most mature private equity out of the country. We are on to our ninth fund. We have done close to 100 investments so far. Tech investments tend to be, a strong forte and an area of great strength for the company. A lot of people don't realize that we were, SpectraMind used to be a ChrysCapital company which got sold to Wipro and became Wipro BPO. We were early investors at Infosys, at HCL, and they had a significant role to play in my IPO at LTI as well. So that's where I got to know them. That's where I became friends, came to know about the firm, and so on and so forth. So, tech is strong area. Other areas that are fundamentally very strong are pharma, but we play across sectors as well, in the country.
From leading a IT services firm to now managing a portfolio of varied technology companies, it's a different challenge, so to say. How are you thinking about the tech suite that you have at ChrysCapital and about tech in general, Sanjay?
So look, we have three companies in our portfolio from our prior fund. We have GEBS, which we invested in 2018, which is a revenue cycle management, predominantly working with the providers and hospitals in the US. We have ResultCX, which is a contact center company, does a lot of work. More than 50% of the work is healthcare, and really, really cool and niche company serving healthcare and other verticals as well. And we have a minority investment in Quest, which is an engineering company. I'm on the board of the two companies. Obviously, the executive teams are very, very strong as and when they need support. And the roles is that of a board member or the chairman at ResultCX, and guiding them and working on the strategy, and anything we can do with the CEO mentorship is what most of my time goes in.
So Sanjay, how do you feel about tech as a pocket? Multiple people have fairly diverse views. Some people talk about how, because of the changing rate cycles, liquidity, etc., some long tail tech segments might have a longer road to normalcy and good valuations. Some of the others have a different view. How do you see it now that you're at the other end of the table, so to say?
Look, I have done nothing else but tech services all my life, so I'm definitely biased. But if I reflect on the last 32 years that I've been doing this, I think the death of Indian IT industry has been written very many times, many times, including in COVID or before that. When digital technologies came in, or when cloud came in, and a whole bunch of reasons that have always been given on why Indian IT industry will perish. But you really look at the historical data, IT industry typically bounces back very, very quickly. And COVID especially has turned things around in a meaningful way. Right? Prior to COVID, technology used to be a board agenda, but the only thing that used to get discussed is cybersecurity, safety and security of patents and technology and IP that the company held. But post, COVID, when companies could not operate because you and I and 10,000s and 100,000 people of a company were working from their individual homes and home offices, there was a way to bring people together. You and I, as consumers, were buying things differently. So the companies had to create different options for people. And this is where the only way these companies have survived and grown is on top of technology. So technology after COVID has become mainstream. If you don't continue to invest in technology, then things will not work out. Now, having said that, obviously with the credit crunch, with the inflation and the interest rate the way they are, obviously there will be some cutbacks in times to come. But technology, if you look at .com, GFC, or even COVID, bounces back so quickly, faster than every other industry that we know of. And we are not investors in the short run. I don't see any problem in 7 to 10 years time for technology services to be still the glory years for the country.
Hmm. So, okay, let me kind of try and circle the square or square the circle, as the case may be. Um, the question of late, Sanjay, is that most people are not really talking about perishing, though there might be some conversation around that, because I think Indian tech is now world class and center stage. But about whether on such a high pace that and such a fast paced growth in the last 24 months that Indian tech has had, could there be a slightly prolonged slowdown because West, which is a predominant customer, is indeed slowing down? And two, now I can talk to you about this. And two, whether the valuation multiples can come off a bit because of the fact that if interest rates stay higher for longer, the discount multiples, so on and so forth, has an impact on the valuations. So how do you think about this puzzle?
Look, I think definitely the pace of growth that we have seen in the last 2 3 years, which have been the COVID years, and technology was really needed for the companies to survive, and it was an existential problem for them. That pace will definitely slow down a bit, but I don't believe it'll result in a degrowth of IT industry. So that's the part which people are not realizing, that it will not lead to a degrowth. And the question is, for a few years, there might be a 12 to 18 months. I think there will be a slowdown in the growth. But after that, when you talk to customers today, they still have so much more to do. Look at the TCS result that happened a few days back. The commentary that I read in the newspaper still said they feel positive about the discussions with the customer because there's a lot more businesses, and the digital agenda that the companies have is still there. And TCS covers by and large maximum number of customers globally. And it's a good reflection of what's there in the market that still exists. So I'm of a belief that yes, there might be a slowdown, but there will not be a degrowth. People are confusing slowdown to degrowth, and and it will pick up. The question is, how soon does it pick up? I think I am a believer that in 12 to 18 months it should be back, because the digital agenda is still in a long way. The problem that we are seeing in the marketplace and the bad press that we see is because some of these tech companies have hired mercilessly in the Bay Area, right? And that's the cost they pay. And they are actually accepting and reflecting on that, saying we have made a mistake of hiring way too many people than were required. And that's just spilling over everybody else.
Mm. Um,
As far as your valuation question goes, right? So I think valuation is already tapered down in a meaningful way, and I think it's at good price points today.
I was about to ask you if I were to come to you and give you $1 billion and ask you to put into a tech services company or an ERD company, as the case may be, would you be comfortable doing it at the current valuations with a 5 year or a 7 year perspective, or would you wait, or would you bargain for slightly better valuations?
We just did. So the answer is we would invest. We just bought a company called Zorient. We just announced it, I think, first week of January. It's a $300 million company. So it's not small, it's not large, but it's not small as well. And we are very excited about it. Look, in our business, we are in the investing business. So as far as we continue to invest in areas which we believe will continue to flourish in mid to long term, which is digital engineering, software engineering, product engineering, we are confident. These are times when we invest in good quality assets than mediocre quality assets or poor quality assets where there's a lot of work required. Uh, in these times, because we are in the investment business, you can reduce the pace of investment, but you just cannot stop looking because the opportunities don't come back. And I'm still meeting such wonderful companies. And when the companies are differentiated and doing very well, the valuations are not necessarily coming down as well.
Yeah, that's true. So you reckon it could be a very bottom-up thing? Because also, unlike maybe say 10 years ago or 12, 15 years ago, wherein you could kind of paint them, if not with the same brush, then with similar shades, is are very differentiated now, you reckon?
Yeah, I think every asset is different, and you got to figure out what your thesis is. And maybe this is the time where I need to maybe tell you a little bit about our thesis at ChrysCapital.
Would be lovely.
We believe there is a shortage of companies with 500 million to $1 billion. There are fewer companies, and some of these companies are with private equity, and they'll churn in due course of time. And all the companies that I'm talking about. But frankly, there are no new companies coming on board. And this is where, with the growth mindset and the growth equity that we have at ChrysCapital, we want to create the next generation of 500 to $1 billion company. So we are looking, and with the fund 9, which was 1.4 billion fund, which got closed mid of last year, we believe that we will be able to create at least 2, if not 3 platforms, which will be of this size. Zorient becomes the first such platform, the mothership of first such platform. We will grow that organically. We will add on multiple companies onto that to create differentiated capabilities that would help enhance the growth and extrapolate that even more. That's the theory and the thesis for us. Now, with this thesis, all I need to do is find these motherships that can be good base, which have a longevity, which have good customer base, which have relationships which are not short term, and then build and add on capabilities which might come at attractive valuations to enhance the capabilities and thereby grow. That's the thesis that we work with. That's what we are excited about.
A question, Sanjay. Would you believe, like you said, that each company is different, and a lot of companies are different, let's put it that way. Do you reckon that growth rates would not be a factor of the size necessarily? Because one has heard that argument enough in the last 48 months that at times of slowdown or at times of uncertainty, clients would prefer larger sized companies with presence across multiple countries and across multiple specialities. Now, you, even in your past role, you were in a company which may have been small, you carried it to a really good size, maybe not mega size, but 1 lakh crores is really sizable, right? In any context, Indian or global. So I'm asking this to you. Do you reckon that over the period of the next 12 to 18 months or 24 months, when we hit a slowdown cycle in the West, which is the principal customer for tech services in India at least, do you think size would matter or size may not necessarily matter?
Look, I think what you're logically right is when there are good times, customers spend a lot on discretionary, right? So discretionary spends happen, and there's a lot of opportunities. And anytime there is a difficult time, the CIO, the procurement, the CFO look at consolidating and bringing it down, bringing the number of vendors, etc. down. Now, what has fundamentally changed in the marketplace, and this has happened from 2012 onwards, more so 2015 onwards, is that the way the sourcing happen has changed dramatically. Earlier, it used to happen, people used to source, companies used to source for scale. Now, customers source for expertise, right? Simply because, and this is what you have heard from me and many other people in the industry, because the size of the projects have come down. The way the projects get done has come down. The duration has come down as well. And I'll reflect in my early days at Infosys in 2000 and 10 odd time frame. I used to have an ERP program where there used to be close to 500 people. Now, in my last engagement at LTI, I don't think I remember any ERP program which was more than 20 people. Now, when the size shrinks up to that quantity, there are many more line items in everybody's CRM as pipeline and projects to be executed. But you don't need such a big company as a size. because the fundamental nature of the way the work is cut out and given out has changed. Earlier days, there used to be fewer technologies, Java, .NET, mainframe, right? Today, there are hundreds of technology in data itself. Now, how can every company have some expertise on everything? This is where lots of smaller companies have built very deep capabilities on Snowflake, on Databricks, and so on and so forth. It's incredible to see something like some phenomena like these in the marketplace. We really lost out on a deal, Neeraj, which hurt a lot. Frankly, I don't like to lose deals. And we at ChrysCapital have a very strong deal team led by Akshat Babbar. So we all felt really miserable. There was a data science company which literally doubled even in these uncertain times in the last 1 year. And their projection was for the next year is to go 70% up from where they are. Now, because they have created a niche for themselves, it's all about creating the differentiation. It's all about going to customers and solving problems. And if you can do that, size does not matter. Customers are sourcing for expertise today. That's what I believe in.
Got it. Now, before I ask you about some more insights into your DNA and ChrysCapital's DNA, one more question, again, pertinent from what would interest my viewers and readers. Is this distinction between IT services and the growth thereof versus ER&D and growth thereof? Do you reckon that because ER&D companies are kind of building those niches for themselves, so to say, and a slightly different kettle of fish than what pure play IT services are, that the growth parameters, the growth rates, the opportunities, etc., might be different and might continue to be strong for ER&D versus. I'm not trying to say that these are better versus the others. I'm just trying to say, because usually people tend to bucket them in the same bracket. I'm just trying to understand how you think about it.
Look, there are companies which do ER&D work on aircraft engines. There are people who do work on turbines. There are people who do work on aircraft wings or automotive. Those are or EVs for that matter. Those are very niche and very specific skills. And there's a lot of work happening in some of these areas, and stickiness is going to continue to be there for a long time. But if you look at the other ER&D companies, and a lot of times people forget that the product engineering, software engineering companies like EPAM, Globant, Luxoft, even our own homegrown Persistent used to be, or Zorient now, used to be doing a lot of product development for software companies in the Bay Area. That's the genesis with which we all came in. Now, over the years, what has happened is those productized services delivery has come on to the enterprise side as well. So there are these lulling of boundaries between product engineering, software engineering, and IT services. That's why they get clubbed together in a meaningful way. I think the capabilities, the strong fundamental capabilities on software engineering, coupled by vertical knowledge, is what is going to help people grow in the future. But yeah, there is a pocket of companies which are very specific, companies which do R&D work on aircrafts or automotive or turbines or power or whatnot. They will continue to have a different life cycle of their own, and they might not get as impacted.
Okay. My final question, really, I could have actually thrown in the what do you think about the. Actually, can I do that? Two more questions, please. One is on this whole conversation for tech at large, not necessarily Indian IT, but tech at large, about the employee problem that probably used to be and may not be. How do you think about it? Because again, we hear very different and varied commentary from companies versus the numbers that they are giving out.
You're talking about the attrition?
Attrition or employee costs or the combination of both, yes.
Look, I think first and foremost, the world has changed dramatically, Neeraj. I never thought we'll move away from working from home ever. There is a concept of ODCs in our business, which is offshore development centers, which typically are biometric, closed door buildings, closed door floors. With video cameras inside, lots of places, customers don't allow people's cell phone to be there. You got to keep them outside and come on in. And COVID has trashed all of that completely. right? That whole concept has gone. By and large, bulk of people are still working from home. COVID has taught many new things for people, but I worry still a lot simply because the new generation of people, because the attrition rates are so high, maybe 40 to 50% of companies, because attrition is 25%, say, then, every 4 years, you're literally changing the company. So 2 years or 3 years of COVID, that means by and large, 50+% of the company is new, which has never seen an office space, which has never seen a manager, who does not know what it takes to work in a team. And frankly, we are not in an individual sport, we are in a team sport in IT businesses. So these are the things that worry me a lot. But you got to bring we all need to create a mechanism in place which is a healthy mix of some time in office, lots of time with people individually working from home and being productive. And that's what I don't think anybody has found a magic mantra as yet, but I think that's what will draw a good balance. But there is a need for a good balance to be brought. Sometimes these recessionary problems are also good because the reality has to be set in for individuals, you and I, right? You start to believe that our salaries will only go up. There is a huge demand. Someday we are going to be in for a big shocker where we are not relevant. The only thing relevant is change, and only thing relevant is being relevant to the marketplace and learning new things. True. Right? And what last 3 years has actually done, you can survive and grow a lot and earn a lot more without upskilling. And that is what I think is a detriment that I think we need to address in the marketplace.
Got it. Sanjay, one final question. What are you out there and ChrysCapital at large looking for in the market over the course of the next 12 to 18 months as a company that you would want to partner with / acquire / invest in? What excites you?
So look, we have two basic kinds of activities that we would do for our existing assets, mostly for GABs, for results, and now for Zorient, which are total buyouts. We will look for assets which enhance the capability, right? So, for example, for Zorient, in December, I spent 5 days in India, traveling 6 cities, right, in 5 days, meeting some incredible companies. So we would look at, how do you enhance the value for that? We just did last quarter an acquisition for Result CX, which was 100% business in the US. We bought a good business in Europe, and they suddenly have a European business, and they're able to serve a lot more customers globally. We would look for some adjacencies for companies for revenue cycle management at GAPs. So that's one set of activities that we will continue to do. Other set of activity that we would do is to create, as I said, we would have 3 platforms from Fund 9, which will be a $500 to $1 billion company. First is Zorient. We would look for other platforms as well, other mothership. So we will continue to look for 300 to 300 odd $1 million companies, which could be motherships, which will further enhance those capabilities and make them bigger. That's the fun part that my life has taken now.
Well, I hope you keep on enjoying. The next time you are in India, you can meet one more company which may not be up for sale, but would be great meeting in person, and that's BQ Prime. So please make sure that you catch up with us the next time you are in Mumbai.
Absolutely. It's always a pleasure to meet you and BQ Prime. Always loved it. Thank you.
But Sanjay, thank you for today. Lovely having you and lovely getting your insights, and have a great 2023.
Thank you. You too, my friend. Best wishes to you and your family as well.
Thank you so much. And viewers, thanks for tuning in to this episode of BQ Conversations.